Everybody. My name is Matt Hawkins with Wheeland Real Estate here in Fort Wayne, Indiana. Just want to do a quick video to give you an update on the market, give you a couple scenarios to consider, and ask the question really, will I save money if I wait to buy a year, maybe two? And a lot of what I'm getting from buyers and different people in my sphere is that, hey, our rates coming down? What's the market like? What's happening here? And I don't know what to say. I'm not a wizard. I'm not an economist. So this video, a giant caveat, I am just a realtor here in Fort Wayne. I'm using some of the tools that I have, some of the resources that we have at our disposal, and using some math just to do some analysis and try to figure out what's going on. So there's no doubt in our Fort Wayne market, we have seen our inventory come down, our sales prices go down. In fact, you can see here in this slide, this is from Upstar, which is our local board here in Fort Wayne in northern Indiana. So this would be data from June. So they're always about a month or so off. So this shows here that in June of 22, we had 1,096 listings. And then in June of 23, we're only at 919. So we saw a 16.1% dip in new listings. So less homes on the market. Same idea for pending sales, as you can see here. And also closed sales were down, but median sales prices were up, and so was average sales price. And so we're seeing less listings, but more growth and appreciation and sales prices increasing. And over here on this side of the column, this is also showing just year to date 22 versus year to date 2023. Same idea. We're down on listings overall, but we're up on median and average sales price. So one thing I wanted to highlight is that I think our market is affected by this. No doubt, if you're sitting on a 2.5% mortgage, it's going to have to be the house of a century, or the deal of the century to consider a move. And I think a lot of families are trying to battle like value versus math and make smart decisions here. So my goal and my hope here was to show you just what the numbers would look like. So I put together this Excel spreadsheet. And again, the caveat is here, I am not a mortgage person. I'm not a financial advisor. So please don't make life-changing decisions based on my spreadsheet. I mean, check my math. I can gladly send this to you if you want to double check it all. But I wanted to show that at least on a spreadsheet or in numbers, like it's not insane, and maybe a couple things to consider here. So I have on the very top of this talking about what a current mortgage would look like for somebody who has a $200,000 home it's a value with a $150,000 mortgage. So they've built up some equity. Maybe they bought 4 or 5 years ago and their home is appreciated, but they've refied since into a 2.88% rate. So a loan amount of 150 with a principal and interest of 622.34 with insurance at about 116 per month, which is about $1,400 per year, and then taxes at $2,000 per year, which is at 166. That puts your mortgage at about $905, which is amazing, right? I mean, that's so low. You can't rent an apartment for, I feel like, less than that. So great mortgage. But what happens if you're in a situation where maybe you've outgrown that home, or you're starting to consider maybe I should move parts of town, or I should move out and get some property, or whatever. So you've thought about selling, but man, that payment and that rate and that scenario is super comfortable, and it's great. I don't doubt any of this. I'm not devaluing this at all. But here's what it'd look like if you decided you wanted to upgrade your home. So I have three main columns here, a lot of numbers. I hope this comes across in the video. The quality is okay. But this first chunk here, these first several lines would be a home that would be for $350,000 on the market, which that's a good budget to get you a home, a 4-bedroom home, get some more space, different part of maybe different parts of Fort Wayne. But then also the next line I had at 400,000, and then this section's at 450. So just hypothetically, at a $350,000 home, and you're going to put down 50,000, which is your equity from your first home, into this new one, your loan amount is going to be 300,000. Then your principal and interest with the mortgage calculation I put into here would be 1945.79. Then your insurance is 166, taxes are 291. Now your new payment is $2,400, which that's increased your payment by just under $1,500 when you compare this new payment of $2,404 to $905.67, right? Not truly apples to apples. You've gotten a larger home, you've upgraded hopefully in a sense. So yes, some increased costs, but that's about what it would cost you in that. If you say you waited a year, you hopefully rates would come down. This is a large assumption, but maybe it's at 5%. That same mortgage payment is at $2,068. So about a $400 or 360, whatever that is, net monthly payment difference, and your new amount is 1163. That's the increase that you've added to your mortgage obligation versus just the $905. So one thing I wanted to look at was these columns here. It's called Y1 interest, Y2 interest, and then total 2 years. So I grabbed a amortization schedule, just a spreadsheet, and I typed in the same numbers. And basically, the first year interest at a 6.75% mortgage is $20,000, 151. The second year is 19,929. So a total over 2 years would be at $40,081. So again, not a small amount of money. That's a lot of interest, but what you do normally when you purchase is that the first years are almost all interest. You're paying a lot of interest payments, and then as you pay down, your principal becomes a larger payment. So it all just kind of evens out. If you have questions about that, I'd be happy to fill you in. So the 2 year interest at a 6.75 on a $350,000 home would be $40,000, 81, and then at a 5% it's at 34,000. So really the math, if you subtract the two, is only $5,251, the interest that's been saved over 2 years, right? If you carried a loan forever and you never refied, your interest amount would be dramatically different. But just say for hypothetical sake, you're trying to plan in a 2 year window, you'd save 5,000 by waiting to get to a 5% mortgage. Same idea down here. So if I jump to $400,000 house, my new interest, or my principal and interest payment and everything included, would be 2770 at 6.75, and then at 5% it'd be at 2378. So again, about a $400 difference there in your mortgage, and then the total 2 years interest savings on a 6.75 versus a 5 would be about 12,000. Same idea for this lower one. So one thing I wanted to consider here was, there's a couple factors at play in my opinion. Again, this is just my opinion. This is my hypothetically thinking out loud. This is kind of what I'm doing internally as I'm considering maybe doing something or buying something, is that our homes in Fort Wayne are still appreciating even with these higher interest rates. So if I just assumed a 5% appreciation, which I think is a conservative number, we're seeing, the median sales price and average at a higher amount. And this all depends on neighborhood and market and updates. It's not a clean number, but just assume it's just 5%. By waiting 1 year, just not even including rates, you're potentially missing out on $17,500 of appreciation on that home, because it goes from a 350 home to potentially a 367 or 365, somewhere in that range. So you potentially, by waiting, would miss out on some of that appreciation. But what I think is going to be a more significant number is that when we have our rates dip down, like I said, I met 5 or 6 couples over the weekend and families that, hey, I'm interested, but I think we're going to wait until rates dip. I think what's going to happen is we're going to have a lot of people that have been waiting suddenly get back into the market, and then it'll just be this competition fest like it was over the last couple of years. And so what happens when there's a lot of competition is that prices go up, and stuff like waiving appraisals goes up, or cutting, I'll give so much money towards a cut appraisal, or I'm going to waive my inspection, or you'll overbid and you'll spend 10 to 15 or 20,000. That wasn't uncommon over a home to try to secure it so you can win the bid. So by waiting a year to save a little bit on interest, you then had to forego potentially appreciation, and then possibly, again, every scenario is different, but possibly have to then overpay over the market because you're competing with other people. So is really waiting going to give you the most amount of money? Potentially, or it might cost you money in a sense to wait, right? I think most mortgage people feel like mortgage rates were artificially low back a few years ago, and now they've swung to be artificially high because the government and everyone's always maybe behind a little bit. And so what really is the normal rate? What should the rate be? And I grabbed this. This is from the U.S. News and World Report. This is going to be mortgage rate predictions for the rest of this year and then early 2024. And the top line here is from Fannie Mae, and then we have Wells Fargo and the Mortgage Bankers Association. Fannie Mae is predicting by the end of this year it'll be at 6.6%. And then potentially by the end of next year, their prediction is 5.9. Same idea for Wells Fargo. They're saying 6.45 by the end of the year, and then hopefully by the end of 24, it'd be 5.5. And then the Mortgage Bankers Association is the most optimistic. We're all right here right now, but they're predicting a much larger dip, down to 5.9%, which is about a 1 percentage point difference. Potentially, then by the end of next year, we're at 4.9%. So I mean, I think take these three. These aren't just some obscure, associations or banks. These are heavy hitters in the industry. Most people are saying they think it'll go down, and then you throw in the election year, and if you're a conspiracy theorist, everyone's going to make it all feel great and look good, so everyone votes a certain way. But it'll probably come down a little bit, is what most people are saying. I hope they do because I think that's a good thing for a lot of people. But my thought and my where I go is that going to end up being more difficult to buy next summer, right? And this graph that I put together, this spreadsheet here, wasn't just for this, but as my wife and I, we're discussing, like, what do we value in a home? Do we value property? Do we value a larger home or a newer home or whatever? I was able to say, okay, if we would increase our mortgage this much, here's exactly how much it's going to cost us, and then be in interest and how much our increased mortgage is going to be. So this is intended to give you some tools to work with. One thing that I'm fortunate, I get to run my own numbers. I get to do my own market analysis and kind of have a good pulse of what my house is worth and how much I would be willing to pay and what that would look like. So this would be a service to you if you're interested in maybe what your house is worth, or how much your rates might go up. I work with a lot of great lenders. I'll definitely plug you in and pair you up with them. But I can at least give you some raw numbers and just kind of go over some scenarios and best practices and that kind of thing. So again, my thought is, I don't know if waiting will actually save you money. It might if the rates never come down, but I think most people would say that they're probably going to creep down. So just consider everything that's going on. Consider your own values of your home, and do your own research. Check my math. Check with podcasts and the news, and wherever you get your information from, and talk to your mortgage person, your favorite person, and see what they say. If you're on the fence about making a move, like it might make sense to consider other things than just the raw payment, right? And a lot of banks right now are betting and assuming that they will come down, so they're offering, a lot will offer maybe a year or two window where they would refi for free because they want, you to get into a home with them. So yeah, just consider your options. Love to talk with you if you have any questions about this. Again, I want to be a resource to you. So please reach out if you have any thoughts or interest, or comment on this if you think I'm totally off or if I'm too optimistic. Would love your insight, but I appreciate your time, and please reach out if you need anything. All right, thanks.